Good morning. I'm Ryan Leopard. Welcome to Our Financial Pillar by Our Neutral Voices. Joining me on the set again today is Chris Hanna.
Good morning.
Mark Ellington with DR Financial. And we have a special guest today, a local insurance agent here in town, Marcus Elam.
Thank you for having me.
You're welcome. Thank you for joining us. Now, Marcus, I know I asked you before the hand the other day to review our podcast from last week where we kind of talked about life insurance, right? You're a property and casualty insurance agent here in town, but you do life insurance also. So
Correct.
Just wanted to get your input on that. Any insight that you may want to add to that segment?
Yeah, I thought you guys did a great job covering a lot of ground. The only thing that popped up to me or that in my conversations that I would add to that conversation, we were talking about younger people and maybe not or being harder to identify that need for life insurance in that younger person. One of the areas when you start to explain to a young person or ask them, hey, did anybody co-sign those student loans? Did anybody co-sign your vehicle loan? Would it be important to not leave that person with that financial responsibility if something happened to you?
Okay.
So that was a way for me to generate some needs awareness that you guys kind of covered during that conversation last week.
That's good.
I like that idea because my daughter's student loan, so I will take your word
Right.
and do that. It's a great idea.
Yeah. So that was just one area that I wanted to touch base on.
Gotcha. That's a good point. Never even would have thought about that. So you're telling me if I'm the kid, my mom or dad co-signs for me on a loan, that it would be a good idea for me to take out some insurance on myself. Therefore, if something happens to me, there's something to take care and pay off that loan so they're not indebted to that.
Correct.
Okay.
Correct.
Very good
Or the flip side to that could also be the parent could be the owner of that policy. And again, because we were talking term policies, we're probably talking $100,000 policy on a 22-year-old. It's probably $17 a month. It's not cost prohibitive to have that type of coverage.
Gotcha. Okay. And take a step back here. I kind of jumped the gun and jumped right into that for you.
Yeah, no problem.
Why don't you talk to our listeners and give them a little bit of background on you, how long you've been in the insurance business, how you got into it, that type of stuff.
Sure. So I obtained my first insurance license in 1999, which was just simply credit life and health. Back in the day when you still had to go through a class and still had to pass a test. Now I think you just sign a form. But I obtained that license in 99 and used that primarily in conjunction with life and disability in conjunction with car loans. And in 2008, I transitioned into a financial planning firm where we used a lot of whole life insurance. So I obtained my full life and health license in 08, in May of 08. So it was an awesome transition for about 4 months. And then obviously the economy in late 08 took a turn, and went to work for a Medicare provider for about 9 years. And then in 2018, I transitioned into the property and casualty space. So over the course of my career, I've done what I've always done. I've just simply added to.
Okay. So you got a wide range of knowledge around the different types of insurance products out there.
Yeah, I am fortunate in that case. And now being in a property and casualty firm with a very long-term book of business that I inherited, what has become very obvious to me when I was in your guys' side of it, a lot of what we talked about was sort of probability, right? Especially around the life insurance conversation. We talk about probability. Golly, 6 months from now, you die in a car accident, or a year from now you're diagnosed with cancer. Would you like to, make sure your family was okay, or a version of that conversation, right? And what I do now, I deal with consequences all day, every day, because I'm primarily on that property and casualty side. But I am now there after the accident has happened, after the fire has happened. 17 times since 2008, I've delivered death benefit checks where I've handed that check to that beneficiary, or in a lot of cases paid the funeral home directly because the beneficiary didn't have cash. So we assigned a portion of that, to the funeral home. So that's been the biggest change for me, is no longer viewing this as probability, but really, hey, let's go straight to the consequences. What does that look like? You died last Thursday night. What does that look like for your family? So,
Great point.
Yeah, that's been the biggest, I think, impact on how I view insurance is I've moved from probability to the consequences.
Gotcha. Okay. So in today's conversation, talking about property and casualty, a lot of times I don't think people realize how much of an impact your insurance plays on your financial freedom, your financial stability. If you're anything like me, insurance to me is something that I want to pay the least amount for to protect myself against something that I hope never happens, right? So tell us, why is it important to understand your insurance policies and how having that knowledge or lack thereof that knowledge can really impact your financial situation?
Well, I would say the greatest exposure that you face, a lot of people, when we're talking property and casualty, we're thinking that I'm insuring the four walls that I live in. I'm insuring the steel and the rubber of my tires and my car. We think that what we're insuring there are those physical items. And realistically, you face a far greater exposure on the liability side of that. So when you look at like bodily injury liability of being at fault in an accident, and what are those ramifications? How can that impact me? Same thing, your homeowner's insurance. A lot of people see that personal liability line on their homeowner's insurance, and they believe that that's tied directly to their domicile. Oh, I live at 123 Main Street, so if my dog bites somebody on 123 Main Street, while they're on my property, that's what this coverage is going to do. Well, your personal liability from your homeowners covers you anywhere worldwide, So if you're sued for negligence for something, that's that coverage that's going to come in. These guys are going to work really hard helping to grow your assets and grow your portfolio and put you in a good financial position. But if it's all destroyed because of being at fault in an accident, where you were underinsured, their 20 years of good work can be undone in an instant.
Gotcha. So that's what I think of in terms of when we talk about like our auto insurance is I go to sign up for auto insurance and I'm just taking the cheapest, what's available, right? I'm sure my agent, probably had went over the different options and all I heard was the cheapest option out there. So why is that important when it comes to like if we get into an auto accident? Like how does, paying the cheapest amount not always the best thing for us?
Well, let's think about, first of all, what your responsibilities are. Okay, so you're at fault in an accident and somebody else gets injured. In Indiana, you're going to be responsible for three things. And this is not an exhaustive list, just I'll frame it through, let me phrase that differently. How I view it for myself personally making this decision. Rather than trying to tell you what to do, I'll tell you how I view this. I look at amongst all of the things that could happen there, I'm going to become responsible for actual cost of medical care. Okay. So everything from the ambulance to the ER to the MRI, the CAT scan, the surgery, the hospitalization, all of it.
And
okay?
whose bills are you responsible for? Yours?
The other person.
The other person.
Yeah. If I'm at fault in that accident, the other driver and passengers in that vehicle that are impacted. Okay. The next thing I'm responsible for is lost wages. How much time does that person miss from work because of the accident that I was at fault in?
Interesting.
Right?
Yes.
And then the third thing that you're responsible for is pain and suffering. Okay. So when you start to frame it that way and you start to understand what that exposure looks like, that can be catastrophic. So if you, if you're purchasing your insurance online with no guidance whatsoever, I have seen competitors' websites and they'll have good, better, best, or gold, silver, platinum plan, however, with not a ton of context. I mean, all of the data, you'll see the 100, 300, and you'll see and under, and you're sort of looking at this alphabet soup, but there's not a lot of context for you to connect it to yourself. And oftentimes people do what you said. The joke that I make is everybody wants the cheapest insurance possible until it comes time for a claim.
Oh, yeah.
Then they want the best coverage possible,
I'm
right?
Yes, please.
I'm just assuming that I get an accident, I'm insured, and I'm covered, right?
Right.
Because I'm paying for insurance, not understanding, the good, better, what that was. But,
Yeah.
So when you say good, better, something I learned recently with going over my insurance policies, there's three numbers that show on there, like for example, 50, 150. Can you shed some light on what those numbers mean?
Yes. And first of all, you are not in the minority and not having a great grasp on what that
I'm sure.
means.
Yes.
I run customer appointments literally multiple times a day where I sit down with policy reviews with my active clients. And we walk through that stuff, and I explain that, and I ask everybody. I'll mention it 2 or 3 times, just like you did. I'll mention it as we're sort of walking through what's on my screen, 5150, and we'll see that 2 or 3 times. And
I
then
thought that was Mark's age that he was,
right,
where
right.
he's heading.
Well, somewhere
And then
between
when they
50
go
and 100.
backwards,
Yeah.
Hey,
You were born in 1950, Mark? Is that
Don't
what's
throw
50?
dirt on the casket, guys. Don't throw dirt on the casket. There's fire in the furnace. Fire in the furnace.
But so in virtually, when I ask that question, do you know what those numbers mean? Almost nobody does. So don't be ashamed of not having a great understanding of that. So what those numbers typically are representing, the first number is the single liability limit for bodily injury in an accident. So the one person limit, okay, how much are we going to pay per any one individual in that accident? So if it was 150, we're going to pay that first $50,000 of those 3 things we just talked about. Medical care, lost wages, pain and suffering.
So all 3 of those you're only paying up to 50,000 for.
Whatever
right?
it is, whatever
Is
it
that-
is you've selected, yes.
Is that per person in the car?
per person in the impacted?
Okay.
Okay. And then the second number is the per accident limit. Okay. So that is, generally it's a minimum of 2 times.
So in this example, that's the 100, right?
That's the 100.
The
So-
100 is what we're talking about is the maximum.
Yep, regardless if there was one person or you hit a church bus with 14 people in it. The maximum that your coverage is going to pay out is going to be that larger number, okay? We're not going to pay over 50 for any one person, and we're not going to pay over 100 for the entire accident, okay? And then the final number on those is the property damage limit, okay? So that's the vehicle you hit, the fence, the street sign, the house 6 times. I've paid out on that in 2020. It was a weird year. But yeah, any things that are damaged as a result of you being at fault in that accident.
Yeah.
And so these limits in particular, I'll share with you, when you look at 5150, how many vehicles on the road today are over $50,000 MSRP?
Well, as you were making those numbers, I start thinking in my mind, I'm going, is 150, seems really low now.
It is. And those are those what we call like state minimums, right? State minimums, that's the minimum requirement that you have to have, or limits for somebody on the road. So that's the same thing I thought when I heard these numbers too, and I figured out what they meant was, look at any SUV on the road.
Right.
That's only a year or 2 brand new. That's $60,000, $80,000, $100,000 for it, and the insurance is only covering up to $50,000 for it. Who's on the hook for the rest of that?
You are.
You. Exactly. Yes. Same thing with the medical, $50,000, you get in a major accident that sends somebody or multiple people to a hospital, the medical bills are probably going to be $50,000 plus.
I don't know.
Right?
Think about don't seem to charge too much generally.
No.
The hospitals seem to like.
Yeah. Think about if it's something catastrophic and the helicopter has to come pick you up, what charge that's going to be and what that leaves you with. $50,000 is just a drop in the bucket to what your bills are going to be. And then on top of that, the 100 for the combined accident, right? You have 2 or 3 people in there, and that's 3 separate people those bills are for. Those numbers, if you're just doing the bare minimum and the worst happens, what difference is that going to make in your financial life?
Well, it's going to be catastrophic, right?
Yeah, absolutely.
Think about it.
Where should we be?
So,
that's a highly specialized question. Yeah. So I can share with you, rather than I want to frame this response appropriately. So for me, I'll use myself again. What I want to see are my liability limits at double what my assets are. That's where I want to see my total liability limits are double what my assets are. So I want to create, in my mind, I'm creating enough coverage from the carrier that the personal injury attorney that gets hired by the person who was injured in the fault that I was, or in the accident I was at fault in, there's going to be enough money there that they can have next Wednesday. We settle with those guys. They're going to get that check next Wednesday. That it's going to hopefully dissuade them from taking me to court, dragging this thing out 18 months before they may or may not win an award, in a court of law. So if you're underinsured and you have significant financial assets at risk, you're a juicy target personally. If the insurance company has a a good size amount of coverage on you, and they can get at those assets next week, or they can receive that payoff next week. That's what I am hoping is going to happen. There is no limit to the risk that we face, but we have to be sort of reasonable and kind of assuming what's going to be the motivation of that person that's impacted in that accident. So double your assets.
Yeah.
This is why I have these sit down conversations with my customers. I like to meet every couple of years, if possible. You guys will be shocked to know people, when we call them and say, hey, we want you to come in and talk for 45 minutes about insurance, they are not banging down my door to do that. So we have to be pretty intentional about scheduling those appointments and setting those expectations with my customers.
And I'm once I started hearing some of these numbers, I called my insurance agent and said, can we sit down?
Yeah.
Right? Can we sit down? Can we go over these numbers? One of the things I was drawing a blank on the word here, but when it comes to looking at the actual difference in cost-wise between it wasn't much.
No.
Astonished.
Yeah.
I was astonished to see that it was not much of a difference in my monthly, and when I pay every 6 months, a difference to go from the basic level up to maybe not even the next one, but probably the third tier up. There's different tiers of those, but I got to a level that I felt I was properly insured based upon my assets. Right?
Yeah.
So what is, and you might have just answered this question within that response, but what does being properly insured mean? Right?
Yeah, that's a really, so when I sit down with a customer, I start with what's important to you. Where are you going? As far as major purchases, as far as retirement planning, things of that nature, I don't do any of those things, but I need to understand, what am I insuring? What risk am I insuring? So I start with that. Where are you now? Or what's important to you? Then where are you now? Identify the gaps and concerns, and then come up with a plan to fix those. Sometimes it's a multi-pronged conversation. I might sit down with a customer for the first time, and we might identify 5 or 6 gaps and concerns with that customer. And when we do that, maybe we address all of them. Oftentimes not. It can seem overwhelming. So we sort of triage and prioritize. Okay, you know what? Let's address these 3 or 4 things. And next year when we get together, we can address them again, or I can follow up in 6 months, or something along those lines. Just because it's important to me, I catch myself, as long as I'm not saying I want in that conversation with that customer, I know I'm doing the right thing. I want to make sure that you're going to be why does it matter what I want? It's more, okay, would this be important to you? And if it's not important to the customer, I'm going to make a note. Hey, we discussed this thing. Customer is aware of that concern, and they're fine with self-insuring that. Right. So that's kind of how I proceed through that process.
Okay. So and to something I think you just mentioned there, I had that same feeling as well when I went and talked with my insurance agent. We talked about the property, and we talked about the 50, 150, what that means and what other options are out there. But then we also talked about my homeowner's insurance. We also talked about some little things that addendums, or what do you call those you can add to them?
Endorsements.
Endorsements was the word. Endorsements that we can have to cover different things within the house as well. And then I went home and I was like, man, that was a bunch of information. And I did not remember everything. Right. So maybe to your point, like sticking to one topic at a time and making a decision on that, and then kind of move on to the other thing. But being properly insured is covering what is important to you.
Correct.
Right.
Correct.
Okay. And obviously, I think we talked a little bit about the repercussions. Can you elaborate on that, like of being underinsured, whether it be from your home, your auto insurance?
Yeah,
what does that look like?
We talked a lot about the liability piece, right? So protecting those assets. And having the appropriate liability limits to do that. So that's the big elephant in the room. If we get into the probability portion of that, the probability on that one is a lot lower than just a simple accident or a homeowner's claim, right? The consequences, though, are dire, or could be, if they're not done correctly. But let's transfer over to the property side, that property and casualty side of that. Specifically when we get into the homeowners, in understanding what our homeowners insurance is going to do. A lot of people treat property and casualty insurance like a commodity, right? It's I don't care if I go to Shell or if I go to BP. You know what I mean?
Right.
Are those guys a nickel cheaper? And I don't have to cross traffic. Fine.
Gas is gas, right?
Yeah, gas is gas,
Yep.
right? When we get into property and casualty insurance, that is just not true. There are a number of factors when you go from company to company, and understanding how those things are going to impact me. Again, if we're just simply buying off the bottom line, we've likely neglected things such as maybe backup of sewer and drain. Right. So without backup of sewer and drain, just so you understand what that is, that's going to cover exactly what the name
flooding.
is. Basement flooding due to a backup of a sewer or drain. Okay. It's not going to do groundwater penetration coming in over the sill plate and into the basement.
So is that a different?
That's flooding. Yeah,
Yep,
that's
okay.
flooding, and you can only buy that from the government. You buy it from agents such as me.
Okay, gotcha.
I do offer it, but FEMA is the actual underwriter on that policy for flood. But that's typically when you're purchasing flood insurance because you're purchasing a home in a floodplain, and you knew that before you bought the house.
Yep.
And
I
they're
agree.
typically priced accordingly.
And I would agree on the basement part. I mean, up until about 5 years ago, my insurance agent one time said, "Hey, you guys got a basement. You might want to get some extra." What did you call it for the basement?
Yeah, the backup of sewer drain
Yeah, and I'm
coverage,
like, that's a good point. I mean, I've had my house since 2008. And
Was this the same insurance agent you've had the whole time?
Yes.
And he had never mentioned it to you before?
Well, I will say the original one retired,
Oh,
so
okay.
this would be the second generation.
Yep.
Of it. So I was like, probably a good idea. Got a basement. It cost a little bit more, not much more. And then, sure enough, about a year and a half ago, we had that rainstorm that went in the morning really hard, and then we had the same thing happen that evening. And first time ever, my basement, it didn't flood deep. It was only like an inch or two, but it was, good $15,000-$16,000.
So, Chris,
damage.
were you aware that was not covered until he had mentioned that to you?
No.
Me either. So that was the point I wanted to make was, when I bought my first house that has a basement in it, I'm just assuming that my insurance agent, I got the insurance and it would be covered. That it wasn't until I started talking with other individuals who brought it to my attention, hey, it's not just covered under your standard insurance. You might want to make sure you have that. My thought was, well, why would my insurance agent not talk to me about that up front, right? Because they would want that. If it's more than I'm paying, good for them, right? And it wasn't, right? No one brought that to my attention. Me as a homeowner for the first time with a home with a basement, I just assumed it was covered. So if any of our listeners are out there, you have a basement and you've never had that conversation with your agent, talk to them about that. Make sure you are covered in that case, because a lot of people I've talked to were not, and it's not something their agent brought up to them. So that takes me to my next point. How important is it to review your insurance policy? How frequently, I guess I should say, should you review that insurance policy with your agent?
So for me, the process that we have built out in my office, initially, when I started my agency 5 years ago, I was going to meet with everybody annually. Okay. And I inherited 999 households. Okay. So right away I mathed that out and I went,
That's pretty busy.
Ain't happening.
we're going to have to adjust that expectation a bit. Right. And so we sort of came up with hey, let's look at probably every 2 years. Let's try to get our customers in every 2 years. And I've now doubled the agency in size. So, and so it's getting tougher. So I work with my team. I have a couple of high-performing team members that are very, very capable of running these types of consultations. But I would say at a bare minimum, every 5 years. That would be the bare minimum. And then anytime there's significant life change, about the same time you're going to be talking to these guys, probably should be talking to me as well. So if we're getting married, buying a home, having a child, things of that nature, significant job change, significant increase in income, get the promotion at work, things of that nature, having meeting with your agent every so often so I can understand what's going on in your life and then make an appropriate recommendation for you.
Yeah, because you can have a scheduled follow-up for you with your client or customer, but you don't necessarily know when they have those what we call life events happen.
Correct.
So that's something for our listeners to take away from this also, is if you have those life events, some of which Mark just threw out there, you have a child, right? You get married, you get a new car, you buy a new house, something like that. These are life events that you probably want to connect with your agent on and just sit down and review your policies and see, are you properly covered to insure those assets that you have.
And if I could, I want to speak to that for just a quick moment. one of the things we talked about was, hey, I didn't know I didn't have that coverage. You were unaware of that coverage as well. One of the things, I can't speak for all agencies. I can speak for my agency and also how other agents that operate like me. Our teams are trained to get this information and to help our customers to understand this stuff. But part of this is you're also really busy. You're buying a house. How many things are you going through when you're buying that house? We're getting the appraisal done. We're getting the inspection done. You're trying to get your old house sold. There's all this stuff. And sometimes the consumer, their bandwidth is just not there for that nuanced conversation, you know what I mean, at that time of sale.
Yeah.
However hard we try, we just, I'm busy. Let me give you a call back. Let me get back to you on that. In my office, we do try to set follow-ups. So, it's not just lip service that, and typically we push those out 6 months, 90 days, 6 months. Let's circle back to that customer and try to make that happen. So, but do be responsive if, hopefully your agent is reaching out to you and trying to schedule. If you don't have a local agent, that's not happening. If you purchased your coverage,
do an online agency or
insurance
company and something.
That's not happening. And so that's one of the shortcomings of that thing. And the other thing I want to touch base on, like you said, fixing those gaps in coverages. These are not $1,000 problems on the coverage side. These are tens of dollars. You know what I mean?
They're $3 a month.
Yeah, literally dollars a month.
$20 every 6 months, something like that.
Yeah, to right size and fix that stuff, right? So that's the other part of having that conversation. Most of the conversations, most of the changes I make in my office are on the order of a couple $100 a year, and that's if we do multiple. If we see 4 or 5 gaps.
So we talk a lot on this show about changing the mindset around different things in our financial lives, and that's one of them. Change the mindset around. Don't just go look at insurance as something you want the cheapest amount for, because you could be paying for something that doesn't actually even cover you to the extent that you need it. What's worse than paying it, $20 extra every 6 months or something is, hey, you actually need insurance. You only cover up to $50,000, but your liabilities, $200,000, right? Your insurance didn't even cover
a quarter of that.
Of that, right?
And so do you want your extra liability and your couple of drinks that you stop by and get high-priced coffee, or do you want better coverage?
Right.
Better coverage might go a lot further.
Mark?
Let me ask a question. Shopping, I guess where I would look is, how do I judge my agent on the service? Because my problem has been, I think I got a good agent, but I have an accident, and my frustration has been in the service, and I don't even know if it's his fault that you're. How do you know? I get an accident with my car, and it seems I got to go 2 or 3 places, or my house, I had a storm come through, and they only want to replace 3 sides of my house, which wouldn't match. So how do you judge that end of it?
Right.
How do I know I'm getting somebody that's going to service me well until I have the accident?
And to add to that was my last question is, what should we look for in an insurance agent, right? Making those calls, don't dodge those calls. That's a positive. Shed some light on what you think somebody should look for when they're shopping agents.
So for a lot of people, what I'm hearing, most of the challenges that they're having are not going to get any better if they don't have local representation. So having someplace you can walk in the door and talk to, okay? That's the first line of defense. And then also understanding what's the level of authority afforded to an agent in the office as it relates to claims resolution. In my office, under very specific conditions, I do have the ability to write a check in my office that I can cover towing charges, things of that nature, emergency roadside type claims. Also, I have the ability to cut a check in the event of large fire claims as well. So you have a fire. They'll call me at 2 a.m. There is a catastrophic, method by which they will reach out to me and let me know, hey, your customers, the Smiths, have had a total loss fire. We're going to have the claims adjuster on site at 7 a.m. be ready with your ADA to write a check to this customer. And so I can, write up to a $10,000 check that frankly claims and the adjusters are going to figure out how to apply that into that claim. But I've got some money in your hand to at least go shopping, get some shoes, get some, some
So
basic
clearly that
things.
speeds up the process of getting the money into your client's hands,
Yes.
right, to do what
Yeah.
they need to. But is that not a common practice with all insurance companies?
I am not without local representation that mechanism can't even exist,
Okay.
right?
Good point.
And so it's hard for me to speak to, especially the independent companies. I really don't know what level of authority an independent broker has.
And when we say independent, because they're dealing with multiple insurance companies rather than just a single representative for one insurance company,
Correct.
right?
Correct.
Okay.
Yeah. Versus dealing with somebody who is a captive, essentially a direct, agent with binding authority, if you will, can be very different. I always thought I wanted to go independent. And I'm very, very grateful that I didn't go independent, because when I start to understand the variability from policy to policy and plan to plan, how on earth I could make recommendations to my customers, I wonder, how do you do that without just immediately going to price? You know what I mean?
Right.
That would be the challenge that I face. That's what I love being specialized with one carrier, is I can really know my carrier. I can really understand my claims process. I can really understand the coverage questions that are going to come up. I can become a Jedi master of this one company, so I can really assist my customers. But going back to your question about how do I know what's going on, one of the things that you should be looking for in an agency, in my agency, one of the things that we do is we touch every claim weekly. I might reach out to you. We may know, gosh, they're not even your contractor is not supposed to start until September. We already know your claim is through the process and they're not starting until September. I might push that out for a 2-week follow-up on that particular case. So, but we're touching, and it might just be a quick check-in. Hey, is everything going okay? Your car is already over at the body shop. It's in process. We're waiting for parts. We know all of those things. But my team members that are connected to that are connected to your claim, should know that off the top of their head. Okay, or have the notes right there in front of them. So when they pull up your claim, we know what's going on.
How much power do you have with an adjuster? He comes back and I'm unhappy with what he's come back. Do you have any say so? Can you push that if I'm saying, hey, this isn't going to work? Like in my instance, you're going to side 3 sides of my house and it's not going to match.
To be fair, the adjuster and the claims handler, those are the people that are that ultimate authority. Okay. So control, how much control do we have? None, because those are the people, that's their job. Do we potentially have any influence to understanding it better? Let's gain a better understanding of what's going on. Why is this the case? Do we have a better story to tell? Do I have a better person? We do have some options as far as escalating. So that field adjuster and the claims handler have made a determination that in particular we especially don't like, as well as our customers don't like. Yeah, we do have some recourse there of other people that we can get engaged in that conversation. Also, sometimes just the presence of us, the agent themselves, being on site can do a lot to help move that process along. Because when I'm talking to that claims handler in, Bloomington, Illinois, or wherever they're located, I can tell them with what, this is what I saw. This is what my customer told me. This is my understanding of the conversation, because they know me. And we can talk more, like I can talk with Ryan because Ryan knows me. But sometimes you get in front of that adjuster, or you're on the telephone, you get the phone call from the claims handler and you're at work and they're calling you at 2:00 in the afternoon, and maybe you're half distracted and you might miss a really, really important part of that explanation to that claims handler, where I know that's important. But those 2 or 3 words that you forgot to mention, or that sentence or two that you forgot to mention, could have a significant impact. But that, again, that's why we're getting involved in touching those claims weekly, is so that we're not waiting 4 weeks to find out, man, this thing hasn't moved at all, because we were just waiting for the customer to send us that picture.
Right.
You know, and then you're calling me going, it's been 30 days. What in the world is going on this thing? Yeah. Well, we should have known that about 6 days late at the worst. You know, that you know, you thought you were waiting for claims. Claims was waiting for some information from the client and having that connection.
So wrapping up our conversation today, in the interest of time here,
I'm so sorry.
Some takeaways that want our audience to, our listeners to think about is, you know, don't always go for the cheapest insurance, right? It's not the best fit for you. Sit down with your agent, review your policies, understand your policies and what you're paying for, and understanding whether that's enough for you or not. And then also, you know, what to look for in an agent. And then I guess lastly, don't dodge your agent's call. If you got a good agent who's reaching out to you because you're not reaching out to them, take that call.
Yes.
Okay.
Exactly.
But
and I think what I would add, is there anything that as a consumer am I missing, like the basement one?
correct.
Is there something I should
Review.
have that I'm not thinking about? Because I think that's huge.
Yep, absolutely. Marcus, I want to give you the opportunity to let our listeners know where they can find you if they have any questions or anything like that.
Sure. My website is marcuselam.com, www.marcuselam.com. I don't know if that'll be in show notes, maybe. Also, my email is marcus@marcuselam.com. So I try to make it fairly easy to find me there. You did ask, is there anything that the average consumer outside of the basement isn't aware of? The last thing I want to add on to that, a lot of people are unaware of the underlying limits when it comes to jewelry, firearms, some of the other exposures that you might have, musical equipment, things of that nature. And to fix those are typically problems that policy is $60 a year.
Yep. And that's one of the ones where I've talked with my agent a few different times about that, most specifically around my wife's wedding ring. And I leave there with every intention of getting it insured, and I don't. So my insurance agent was following up with me, it would have been on there by now. But and that's on me, but also wanted to get, again, the reason your agent's calling you and following up, that's a good thing. They care. I've seen Marcus in action. I know I've talked with him enough times to know that he truly cares about his clients. He's not just trying to sell you something you don't need. He's trying to ensure the things that you care about, right? Make sure you're properly protected. So once again, Chris, Mark, thanks for joining us. Marcus, thank you for joining us today as well. This is Our Neutral Voices, a financial pillar. Peace.
Happy trails.
Thank you, guys.